I'm Sarah Eisen, live today from FII, which is the big investment conference in the Kingdom of Saudi Arabia. And joining me is Ken Moelis, the executive chairman of Moelis Company. He has been here 9 years in a row, which is for every FII that we've had. So you've been doing business here a long time. You took Aramco public in the biggest IPO of all time. I mean, is there a lot of deals happening? Is that why you're here?
There's a lot of activity, a lot of growth. I mean, you take a country going through the changes that Saudi's going through, infrastructure, hospitality, tourism. It's not just Aramco. It's everything else around a 35 million population that literally is changing almost overnight.
So I guess they're also betting big on AI. I mean, that's been a big topic of conversation. How much are you doing around that in the Gulf region?
It's interesting. They are very focused on AI. In fact, Aramco is one of the firms focused on AI. And I was talking to the CEO about it the other night here, and he was saying his information. Again, I'll get the amount of bits of information they have from drilling. Think of what their proprietary knowledge is of rock formation drilling, and they are doing their own foundational models, and actually going to put AI to work. Who has more information on drilling? And I think they're very excited about what they might be able to improve in their economics.
I mean, speaking of excitement, I imagine you must be busy. We've really seen the capital markets heat up lately, IPOs and M&A, not just internationally, but obviously domestically as well. What does it look like right now?
You have everything in the position you'd want it to be. By the way, sometimes that scares me, but you have the Fed on the brink of lowering rates, most people think. You have, you have the stock market at all-time highs. You have the private credit markets flush with capital. All the elements for an amazing M&A boom. Now, my 45-year experience says that's the time you want to be a little careful. But for right now, it feels like the next 12 months could be very busy. So you want to be a little careful, but there's still time to go? You just want to be careful that you don't overdo it. It feels like you're on the brink of an M&A, but we think you are, by the way. It feels it. We're busy. The street's busy. Look, when you hit all-time stock market highs, you have the Fed looks like it's going to go into an easing cycle. And then you have this new technology, AI, that's going to change every go-to-market for companies, and they have to think about it. They have to develop strategies for it. I'm pretty bullish about it. I just say, somehow when the whole consensus gets on the same side of the boat, I always get a little worried about the boat. Yeah, I mean, you're not alone in echoing that second sentiment. I'm sure you're in the middle of some of these deals. We just got at the last hour this deal on Microsoft and OpenAI going to a for-profit company and the Microsoft stake. But there have been all these unusual deals, the AMD equity stake, the data center financing deals. First of all, how involved are you in this, and what's driving it? We're involved. We have a very good data center business. And I don't think I can think in my career of a situation where so much value has been agreed is out there. Trillions of dollars of value is out there. And hundreds of billions, if not trillions of dollars of capital expenditures need to get there. And so there's no cash flow yet. So you gotta be creative. You have to be very creative financing going on. And I don't think I've ever seen an opportunity like this. People talk about the internet in '99, but I don't think it was dwarfed by this. It's funny, I always hear about pets.com, and it was a $6 billion market cap company that just went public at 11 and didn't make it. It's nothing close. You don't see that now? It'll happen. By the way, it'll happen. Not everybody will win. No, not everybody will win. But I think there'll be substantial winners. Of course, there's always losers. It's capitalism. Somebody wins, somebody, not everybody makes it. But so how do you judge the winners, and how do you judge which deals to do? Talent. I think you meet the people, talent, business plan, go-to-market strategies. There's some companies we were talking about. One of the AI companies called Open Evidence that I got involved with early. This is you as an investor. Yeah, I happen to be an investor in it early on. I met a very brilliant person who had a brilliant strategy to take medical research and make the most recent research available to doctors. And you go, God, that seems like a plan that has to work. And it is. And the fact is, I think they have 15 million doctors involved in it now, or some crazy amount.
This is valuation $6 billion company, this Open Evidence.
Yes,
right?
and I think they're going to improve health. That's a substantial way to understand how do you improve health outcomes. Well, your doctor, who might not be able to read every paper that's come out about what your diagnosis says, can now ask Open Evidence, what do you think about all this, and get a pretty detailed answer without spending 9 hours a day reading papers.
So what other sectors are attractive right now when it comes to deal making? I know you did a big water deal
we did that.
recently. Not as sexy as AI deals, but $60 billion water deal.
But so that's sexy. Anytime you do something, that's fun. But I think it all goes to the whole utility space, where power is on everybody's mind. By the way, if AI and data centers are on everybody's mind, right behind that is power, and that goes to the utility space, where we have a great business. And I think the other one we were talking about, and it does play here as well, is the whole entertainment business and really the emergence of sports as the center of entertainment. It's kind of amazing what has happened in that realm of creating companies that are substantial.
Well, you did.